the dollar Swiss. So this is the dollar Swiss for the January 24th. And from last week, we are, as you see that the dollar Swiss is above the structure point of 103.71. So basically, we should be long the dollar Swiss. And take a look at the chart. It is the same. If you see this chart, I'm going to put a blank chart for you without the. It looks pretty much like the chart of the dollar index. It is pushing down. You had the first push up, you had a sell-off, and now we are coming back, and this is here, the 105 right there. That should be our breakout point. For what, Heinz? For the for which pair you're talking about? The dollar yen? I will come and do it in the break because I'm recording. Okay, because I'm recording this, so I'll do it in the break when I'm finished with the dollar Swiss. Okay. So the structure point here is this high here, which is the 105. Look at this. This is 105.07. The week that follows is 105.03. So the 105 handle is a pretty strong handle for us. The 105 handle right here, and we closed at 104.80. We did try to test it by going all the way up to 104.94, and we kind of slightly sold off a little bit, closing at 104.80. So we're pretty close to this. So we're setting up. We should be setting up to break above the 105.50, and of course that break should lead to a big push to the upside. So as you can see that the dollar Swiss is setting up for a very positive move. This here so if you look at the weekly chart, this is the one that I have with the lines on it. This here is our structure point, the 105.07, or the 105 handle right there. This is where we are at this point. So our buy signal, or our strong buy signal on the dollar Swiss, is a trade above the 105. So I'm looking for a trade above the 105 so that I can get a breakout move to the upside on the dollar Swiss. Again, look at this sell-off. We had a reversal week 2 weeks ago. I want you to just to see why am I favoring the bias to the upside. This is our major downtrend. We had the wave, a big move to the upside starting from late November. The buying came into the dollar in late November against all the currencies. We had our sell-off, and look at this week here. We sold off. This is quite a bullish week, and then it was followed by a big range week to the upside. Which one? This is a failure. It was failed to continue to the downside, but it is also a reversal. And this, again, as you know, this is a reversal pattern, if you will, or this kind of it coming back above this low after this correction, and then it was followed by a big range week to the upside. This week's range is over 250 pips to the upside. That is a very powerful or a very positive setup for the dollar, even though we had a major capitulation in the dollar yen. But yes, Francis, yes, that is correct. It is a hammer. But the problem with people when they are talking about candlesticks, and I'm happy that you identified that that is the correct thing, is hammer. But the key to candlesticks is the location of the candle. Okay? The location of the candle. Where did it happen? Okay, on the chart. And what happened after it. So right here, the location, this location, you have when you're looking, each candle could be a hammer. For example, this is a hammer, correctly so. You got it right. But also, this could be a hammer. Okay. Also, I mean, we can pick. This could be a hammer, but the key, if you want to, the key in doing is where did it happen, the location of it, and what happened after it. So this is the location, and you ask yourself, what is the location? The location is you had a downtrend, a correction to the upside, a continuation to the downside, then it reversed back up, so that's positive. It was followed by a big range to the upside. So all that pattern together is, all of this together is a very positive pattern, and I should be looking for a continuation to the upside. Okay? So you have to look at the location. All right. So our handle is still the 105. These are the 2 days decline that happened Thursday and Friday, which is basically the sell-off that took place in the dollar. The 105 is our handle. And if you look here on that day, on Friday, we came back down. We nearly tested the structure point of the 103.71. We made a low of 103.74, 2 pips away from our structure point. And then we reversed back. We bounced about 40 pips off the low of the structure point, so it is very positive. And we traded above the prior day's low, which is the 104.20. So that again is quite positive. So we'll try. So we are basically looking to go long the dollar Swiss. And we were going to try to pinpoint our entry. So looking at this, the first thing that our buyers want to be to the long side. We want to be buyers of the dollar Swiss. So our rule is, if our bias is to the long side, then I'm not going to take a trade in the opposite direction unless I have a structural failure. So any trade over here is not a structural failure. My first structural failure would be a trade below the 103. So basically in this case, because the 103.74 and my structural point is 103.71, so we are not going to go short the dollar Swiss unless it trades. And if you can see how nice it is, this is your structural point. Even on the intraday, you can see that this is the structure, and it is also lining up from the structure on the daily and the weekly chart of 103.71. So we are not going to be short the dollar Swiss unless it trades below the 103.71. And our buying point this is, we are going to buy above, so let's see on the daily chart. 104.45. Okay, so we want to make sure that we take the buy above the 104.45. These are the long points. So our structure long and our structure short is the same. And the structure long in this case is the 105 handle. So I'll make it exactly like it looks at the chart, the 105.07. Okay. Now our short point, because it doesn't appear, I don't know, for some reason it's not showing on my. So the short point is 103.71. The structure short is also 103.71. The structure long is the 105 handle, the 105.07, and our long point is the 104.45. Okay? For some reason it doesn't show.